U.S. stocks may move back to the downside amid escalating tensions with Russia. Crude oil back to flat amidst geopolitical headlines from Middle East and Ukraine. U.S. stocks remain under pressure in pre-market trading. US dollar yen price forecast drops below 134 dirham as traders flock to safety on Ukraine-Russia conflict.
More weakness ahead for Canadian dollar. Jeffries.
U.S. indicated it will not respond to Russia's nuclear doctrine move.
Good morning.
U.S. dollar mixed, havens in demand. Scotiabank.
Yeah, definitely a risk-off mood. Although some of you are, wow, actually it's very mixed. It's interesting. Huh. Well, please complete the poll. All right, so let's get on with it. Good morning, comment allez-vous? How are you? Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we do that, you say? Well, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. Definite move away from the stock market and into the bond market. Oil's down a little bit, dollar's up a little bit, but we haven't even really got going. It's only 9:16 a.m. And Bitcoin still at 92, but as you probably know, we have projected to go to 100,000. Okay. Jim, mixed and neutral are the same. Yeah. So anyways, if we take a look at the scatter plot, or sorry, the gauges, you can see we definitely have a risk-off mood in the midterm. You can see the put-call ratio is bearish. Okay, but yields have come down finally on the long term. Yay! Oh, I see what you're saying, JP. Yeah. Okay. So that's a new one, and the 2-year yields have actually gone up on the 2-year and down on the 10-year. That is good. That's really interesting. That's definitely a shift out of short term into, a different part of the curve. Dollar flat week over week, S&P 500 down week over week, yen strong week over week, gold up week over week, and volatility up significantly week after week. No, I suppose I'm looking more at this, JP. That's all. Yeah, it's not that you're easily confused. It's that this is the bigger pressure on the market in the moment. Now, this is based on evaluation of all these different markets that I just went through. There's also, fundamentals, which are a whole different thing. So like we could look at fundamentals for euro dollar, and that gives us a whole different thing based on macroeconomics. But then we also have the sentiment of what's going on now based on geopolitical risk, for example. Eastern Europe, the war in the Ukraine. Okay, all these things they're different, but they fit together. Cool. So the tool that I'm using here is traders.com, where you fully automate your technical and your fundamental analysis. We also have many hours per day of performance coaching. So I already met with the fundamentals team earlier this morning. Okay. And I believe there was already a U.S. Open session. Let's see. Passed. Yes. Okay. So we had a market open session, scalping the U.S. market open. Then we had the fundamentals. Okay. We also had a London session market open earlier today. So, I don't know, like about an hour. So we've already had 3 hours of performance coaching today. And later today, I have my week on the street. Okay, so that's usually at least an hour. So, wowzer, that's all our performance coaching today. So that's what traders.com is. And we were on the fundamental side. I'll zip this over to the technical side. For the complete package, of course, is you need execution. Once you have the data you need to make an informed strategy, both technically and fundamentally, then you need a way to execute your trade. And that's where Trader's Way comes in. You want an ECN with straight through processing. I don't know why you would choose a broker otherwise. Okay. And what that means is Trader's Way actually enters your trade into the interbanking system. If your broker is not an ECN, does not have straight through processing, then they trade against you. That's how they make their money. An ECN does not. They make a small fee for actually executing your trade into a pool of liquidity partners. Yeah. So anyways, that's what you want. So that's the complete package. Traders.com with tradersway.com. Makes sense, doesn't it? Oh, faux show. So I just, JP's like, I bumbled, that I'm more risk off. Well, when you go to like the stock market, we've had some massive down moves. Let's go to like a 15-minute chart just to see what's happened in our recent past. Okay. And all that makes sense. Okay, up to the moving average, down like a ton of bricks at the market open. Up to the moving averages, down like a ton of bricks at the market open. Up to the moving averages, down like a ton of bricks at the market open. If you look at it on higher time frames like the 4 hour, Okay, it's much the same, right? Up to the moving averages, down like a ton of bricks. Up to the moving average, down to the, right? And you can see that we had yesterday a 2155 crossover on NASI. That's a sell. So up and bearishness, right? Same thing on S&P 500, 2155 cross down. You're a bear. So it was up and then down. If we like set the pivots properly, let's see, make this bearish. I didn't update them. Okay, and then this one doesn't even have them, so let's add them. Insert indicators, custom, biased pivots, bearish mode. Okay, everything is set properly. Okay, and the pink zones are the sell zones, right? Pink zone down, pink zone down, pink zone down. Okay, and then we're down into our daily targets and a pause. So, you know, look at this, right down to the aggressive and then a big pause. Okay. So that is also part of it, JP. Just it's opening bearish in the markets, and that's that weighed on me for sure. Like watching these massive moves to the downside earlier this morning, you're like, oh, yeah. Yep. Yeah. Yeah. Okay, so now, 43 is kind of like up in here, 43,100. Somewhere maybe 43-ish is kind of role reversal. This one didn't make much of a lower low. This didn't get through our old support lines, but these are definite tests. Okay? This is definite tests of key support levels. Okay? And then, of course, bear in mind it fell for 8 hours straight. Okay, so yeah, London open to now, basically bearish. Oh, faux show. Let's take a look at commodities like gold, oil, and Bitcoin. Gold, oil, and Bitcoin. And silver. We'll do our silver. Silver through the hourly. Let's go a little further out. Okay, and what we have is we have it coming back to a 3A2 Fibonacci retracement. Okay. And then working our way back up. Now you can see I have that marked already, but you could also mark this zone, but it's not really a 3A2 or anything. Okay. But the idea is up, 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 down, down, buy. Where? Somewhere. Okay. Somewhere in that zone. Okay. Capiche? Higher high. I mean, let's try the equidistant just for fun. And then we bring that around. It seems like a pretty flat range. Yeah. Pretty flat range. I don't know if I can even adjust this. It's too far out. By flat, I mean kind of like that. And then up. I don't know. Anyways, XAG, silver, XAU, XAME. Let's take a look at this one. And we had it coming up off support, so it came off of the bottom here. Yeah. And then somewhere up here, which we're getting pretty close to, would be the formation of a right shoulder. Could be interesting, don't you think? Okay, these are daily sell zones. If you want to change that, you can. So you go to bias pivots. Oh no, actually those are weeklies. Interesting. We must be on a high time frame. Yeah, that's okay. I think I missed that. These are daily candles. Wowzer. Yeah. So you probably want to watch this on smaller time frames and see if it rolls over. Now these are zero lag moving averages, so they won't match your moving averages. Your moving averages are lagging and these ones are not. Kind of cool, huh? But right now on this time frame, it's definitely bullish, right? So what you eventually should do is you shouldn't necessarily just trade in the direction of the moving averages. Ideally, you have a rationale for buying or, for owning the gold or not owning gold, right? Now, if, when you see something like this is a rollover and that becomes bearish. And this becomes a rollover to the upside. Now it's bullish. Now, I think gold has some legs on it, actually. But we're not quite there technically on the higher time frames. But if you're going to try to be a buyer of gold, you can try on the smaller time frames. Realize that it's, you're fighting a longer term downward move. But just, maybe address that. Maybe you go in with smaller lot sizes and slowly accumulate a position as long as this stays bullish. So like the longer term, let's do like daily is still very bearish, like up into here and then down. But you don't know if that's going to happen, right? In the weekly bearish, and you see, we are climbing the ladder. We're already in tomorrow's buy zone. So it's like one of those things, like you don't know, but if you're going to be bullish in a longer term downtrend, you have to do it on a smaller time frame and then address the fact that it's a little bit riskier. You're anticipating a change in the direction on the longer term. And you should be able to support that. So like one of the things I've been saying all week is over the weekend, Goldman Sachs issued a bullish call on gold for 2025. And they believe central banks are going to buy. Okay, fine. But that occurred, down in sort of the bottom of this move, right? That occurred sort of in here. Great. So now you could try doing this and just kind of chip away. And if you get it correct, you do suddenly have a bullish trend behind you, which is a tailwind, right? It helps you elevate the price of gold. Okay. So it can be done. You can buy at the bottom of the channel. So it's plausible. Okay. WTI has made it back to the daily 21 and has not fallen today. So I have it trapped. I know it's really hard to see in here. I have a bottom trap from yesterday, okay, up here. So, we'll see if it'll find any direction. This might be based on geopolitical risk now, not supply and demand. So right now, the United States is fighting a proxy war with Russia, Iran, and North Korea. Yeah. Russia's using Iranian missiles and drones, and they're using North Korean soldiers. And the United States is just sending weapons over and using those three axes of evil as crash test dummies. So anyways, if that threatens sort of, if it escalates, I don't know. So I guess the idea is, takes Iranian oil off the market. I don't know, but whatever. Okay, makes trading a little harder. Yeah. I think the bigger thing when it comes to Iranian oil would be like Trump isolating them again, right? Trump just comes right in and just isolates Iranian oil and Iran in general. That seems pretty reasonable. And that, could take down some of the oil. It's kind of hard to really take it off the market like we saw with Russian oil. But it does increase the potential for American oil to be sold. Okay. Yeah. Okay. But right now, I think it's bouncing off the technical level more than anything. Just because there's tension in Eastern Europe doesn't mean that's why oil is going up. But that's, of course, what the media will tell you. Could just be because it hits support. That's that. All right, so let's put this back to where we were. I had this up here as a sell zone, and now we go through here and we show that it looks like it's getting through support down to the bottom of the upward channel. Okay. And so yesterday we were caught between the 21 and the 5. And the 5 is a sell. And we're through the 21. And we had talked about this, that would set up. I think we talked about it here, but it might have been in the technical trading team. Maybe it was there, but we talked about like if it comes up and hits the 5 and this zone holds, then we're likely to head down here, which of course is the 55, which makes sense because if you breach the 21, you come down to the 55. And so the potential for that now, since we talked about that yesterday, more than 12 hours ago, so now you get like M3 to central, you get kind of this action going, huh? Yeah. Yeah. Okay. Already a big bounce off the bottom. So we had those big moves earlier today, like literally just not even an hour ago. We had that big drop. I'm sure you were trading it. And the market is open. Okay. I hope you're using the implied volatility tool. Have you guys fallen in love with it? I think it's really good. Yeah, I think it's really cool. Look at NASI. Right down into the implied lows. I mean, just crazy. Both these assets, right? Just dropping hard into the implied low and the implied low holding. Look at this, the implied low and propping oil up on the hourly chart. Just beautiful. Just look at that. I mean, we spent 1, 2, 3, 4, 5, 6 hours at the implied low in the last 2 hours with a rally. Well, that's what that means. Should go a little higher and maybe as high as 70.5 today, maybe. We can see here, based on Tuesdays, that the last couple of hours are the most, right, based on implied volatility, the best hours of the day. And here they are. Boom, boom. There's those candles right there. Right on time. Right on schedule. Very cool. We had some CAD news, huh? Inflation's a little higher in Kenyatta. Okay. Sort of a mixed bag here, up for 2 hours and then down. And yeah, so far that's what's happened. That's what these candles are, the candles since the event. Okay. But since we have the data, they're not great trades, right? You see, these are down, but this is down, then up, or wait, down and down. And this is down, then up. And then this is down, then up. And this is up, then down. You know, they're not great, but what do we see on the scalp? Dollar strength, dollar strength, dollar strength, dollar strength, dollar strength, and dollar strength. Yeah. So we take a look at the CAD pairs. CAD is gaining on it. Higher inflation, higher interest rates. What's up, Silly Sally? If we take a look at the dollar pairs, okay, these are all high time frames. Let's get them down to like hourly. Boom, 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 boom. Yeah, looks like with the higher inflation, you get a central bank that cannot cut interest rates anymore. But look at this technically, though, huh? Just technically. Regardless of what's happened in the past, we have this, right? And you have this. So the course of action is take it down, right? And definitely, like, this is bullish, 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 this is bearish. Yeah, it can happen that fast. Next level of support is way down here. Okay. Now, this is a WM3, which predicts a WM1. So that gets us down to support and then probably down even lower. Oy vey, a massive comeback. Now, is that US dollar weakness? Is that a change in direction? Well, usually with weakness in the US dollar, you're going to get the stock market to rally. And so did we have a big drop at the open followed by a massive acceleration to the upside? Well, I hate stuff like that, but I've seen it before. but I don't know if I believe in that quite yet. Okay. These moves here were quite typical. Yeah, big moves, fast moves. Like if you go to a 15-minute chart or maybe even less. Okay. And what was the big brain behind this? What was so smart about this trade? Lower low, lower high, sell at the pivot, exit at the target. It's actually a cliche, isn't it? Right? It's not that complicated. Let's see how some of the other ones did. Okay, let's go to a smaller time frame, like a 15-minute. Okay, for the day, this was the projected sell zone. The target was here. We hit it. We respected it. And then it moved again at the market open. Okay? Yeah. Kind of interesting. Using this vol to figure out tomorrow's sell zone is still in here. And if you're going to use price action, you're going to use this zone here. They're about the same. Okay, if you're going to use the moving average, they're all about the same. If you were going to try again, you would try again sort of in there. The yen is on fire. So, believe it or not, yesterday, the only real yen trade that was plausible was the CAD, and I wasn't even bullish on the CAD. And all of a sudden, the CAD is bullish. And I'm like, what? But we're still here. We're still on the moving averages. The other ones are below the moving averages. And so it was kind of weird. Now maybe it's got some life into it. Now maybe we can catch a bid on CAD yen. What do you think about that? Well, in the smaller time frame, you could start playing this, maybe. Oops. Okay, maybe, right? Maybe, baby. That could be your shorter term move. Try to take that north. Take a look at some other things. Okay. We had a 66.6 short, and it hit the 121.4, everybody. These are two numbers that I make up. They're not Fibonacci numbers. They're numbers I've made up, 66.66 and 121.4. Part of me making this up is to show you there's no magic behind this nonsense. Okay? Your job is to sell high, and that's it. And it's not the way that the pineapple skin grows. It's not the cherry blossom tree. Dude, sell high. So anyways, very interesting how that all turned out. And then a big change in direction at the weekly support. But I don't care about weekly support. Like, oh, dang it. What are these wacky, weirdo setups? So I always look at that with concern. If you go to the bigger picture, it just might be somewhat of a role reversal. And so let me draw that for you. Do you guys know the secret word, the hammock? The secret word. Okay, double bottom, higher high, higher low. That's going to be in the back of my mind. Sure, LU. Yeah, MACD is great. Okay. I just calculated it with my mind. That's all. I can plot it. It just takes up space. Remember, I don't use indicators like most gurus, I think. I don't look at them and say, ooh, MACD divergence, so therefore... No, I don't think that way. I don't think that way. So, like, for example, I believe seasonality suggests that I want a yen rally if I can catch it. I'd love to have a yen rally to the upside, all yens to the upside between now and even all the way out to Canada Day. There'll be a little blip sort of in February, March, but in general. And so I think that way. I think seasonality. I think commitment to traders report. I think fundamentally. I think global cash flow. A lot less than what does my MACD tell me? Well, to answer that, what the MACD tells me is the angle and separation of the 21 from the 55. But it's not a signal to me. And I could already see that. Like, oh, look, the MACD crossed below the waterline. Yeah, of course. And right here, MACD started falling. Yeah, I can see that. MACD started falling, and then MACD started rising, but it never came close to the waterline. So I can just draw the MACD whenever I want. So I don't use it as a signal. And if I can see it, I don't need to draw it. And so I kind of just see it. Okay? So my bigger question then is, will this bounce carry out a significant role? And could I start to buy dips and hold it for as much as 6 months? Well, it is a cycle, Richard. That's what seasonality would be, like the cycle of weather patterns. It's a cycle of capital flow. So today in my fundamental trading team, I had mentioned a little bit about the seasonality of oil refineries and their purchases of raw crude oil. And you can see it in the seasonality of oil. Okay. So anyways, I'm a fundamental trend trader. Okay. And then I go to my charts and I say, so let's say I'm bullish on yen pairs. I don't care about euro specifically. In fact, I may not even like euro that much. But let's say the basis of everything is based on my yen weakening. Okay, let's say that was it. So then I go to my chart and I don't look for a MACD per se to put me in. I do technical analysis to say, okay, if I was going to buy this, is it a good time to buy? Am I at support, and is this asset making higher lows? So at some point here, I will count this as a double bottom, and I may be able to get a higher high, higher low, and then in which case I buy all higher lows. Do I look at higher time frames bigger than daily? No, generally not, no. Because that doesn't incorporate current fundamentals. So if I look back 3 years, that doesn't tell me, or it doesn't price in, like what happened 3 years ago, isn't pricing in the Trump administration next year. And yet that's what's happening. If I look back 3 years ago, looking at technicals, what I see is the beginning of the war in the Ukraine. But that was 1,000 days ago. And, well, things have changed. We are pricing in other things. Okay? So I don't look back too far because that takes out fundamentals. And I believe in fundamentals. So I don't want to go back too far. So I believe in technical analysis, but if you tell me, oh my God, we're at support from, 1997, I'm like, oh, whatever, dude, I don't care. Okay. By the way, thank you everybody for answering the poll. I appreciate that. Okay. So those are some big picture stuff. And I would do what I just did here on all the other yens. Okay. So we looked at some fundamental stuff. We looked at some new stuff. So like patterns in news-related vol in the Canadian CPI. We looked at implied volatility levels of some of the stock indices and oil, I believe it was. Of course, there's a lot more going on than that. We looked at some of the fundamentals, right? Like the main fundamental page. We looked at some of the risk gauges. There's a lot more going on. For that, you should catch our coaching. So I already handled all that today. I guess I can just open up. See, we've already covered all this. All right, guten Morgen. Okay, and so, and we want to see a crossover to the downside and a trend down. So these are yields in the treasury market. So we went through an audit and somewhere in here we cover some oil. Even though the score here's pound Aussie, pretty bearish. It made interesting. We covered some seasonality. He doesn't need to change his doctrine. So what it is actually a good thing. It means he's playing the game. Okay. So we went over seasonality. Trying to get back on track. And there's some gold. We covered gold. Last week lost some bullishness. And so this might be an interesting signal for you. Right? And here it is. This is where we get into it. So you can see here the seasonality of oil, raw crude oil. And we talked about how that ties into the way that oil refineries work. Okay. So we've already done all of that, which is quite cool, huh? Yeah, very cool. So now we can go into the fundamentals here, or some of the technicals, if you will. We'll look at a few of these, and then I'll let you go have a wonderful trading day. USD Kitty CAD is in a down channel, and 27 minutes ago, you got a heads up to the sell off the top. Isn't that a beautiful little setup? Down, 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 up, up. Okay. Now, of course, you should have been anticipating this. This is confirming the continuation of the down channel is likely to have begun. Aussie dollar, on the flip side, okay, is doing the opposite and equal. Up, 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 down, down, buy. 28 minutes ago. Okay. So this is exhibiting strength and is an opportunity. This is exhibiting weakness and it's an opportunity. Okay. USD yen shows the potential for a breakout, but since it hasn't done it, like if it does it, that's the opportunity. But since it's a triangle, it's non-directional. Okay, lower highs and higher lows is non-directional. What you want to do is you want to find, okay, these channels. I mean, if you're a trend trader like me, you love the channels. So you're like, dude. Okay, so here are the Forex pairs, crypto pairs. Here are the stocks, commodities, and all that kind of stuff. And key levels I've turned off. You can get rid of Gartley's. Those are potential reversals. Okay. And you can get rid of breakouts. And we'll just leave that. And look at that. Now you just have direction. Sell. Okay. Sell lower highs. Buy higher lows. Sell lower highs. Sell lower highs. Buy higher lows. Sell lower highs. Buy higher lows. Sell lower highs. Buy higher lows. Isn't it beautiful? Dude! Oh my God. Shut the back door. It's gorgeous. Now you can go through 7,500 charts looking for these, but this will just speed things up for you and put, these are like your hit lists. What's going on in the crypto world? Sol up, ETH down. I don't like trading in opposite directions, but they are significantly different time frames, huh? Take a look at stocks. Nike down, AMI up. Okay. Now, this is interesting because I heard this on the news earlier today, like NVIDIA coming down hard, but the trend is still up. You see? Let it come down hard, and you might be able to buy it at 130, 186. Huh? You get the down leg, sets up an up opportunity in the future. See, this is about the future. That's not a sell signal. It's pause and wait for a potential buy opportunity around, we'll just call it a 132. Oh, my Lord. It's beautiful. Okay, sell rallies, buy dips. Sell rallies, buy dips. Buy dips. Sell rallies, buy dips. Tesla, buy dips. It's gorgeous. Okay, oil, buy dips. Okay, international oil, Brent, buy dips. It's good, right? Yeah, it's very good. I get it. I got it. I know it's good. Wait, is there no gold or silver on this? Let me check. Yeah, there is. There are just no patterns. Look at that. That's some interesting news to use, huh? There's no patterns in play on gold or silver. Oh my gosh, dude. Wait. Wait for the signals. Okay, and remember, they're not signals. It's pattern recognition. So if it sees a pattern, you know the pattern is somewhat predictive of future results. That's why it's considered a pattern. So if there's no reliable pattern that says up or down, then you're going to get slop and chop. Do you want slop and chop? Hey, Jordan, what do you want for breakfast? Slop and chop. Slop and chop, that's for pigs, right? And pigs get slaughtered. Yeah. So anyways, S&P 500 on the small time frame, sell the rip. FTSE, sell the rip. NASI, sell the rip. Okay. Yeah. Nikkei was up, but look at that. Wow. And just a falling wedge. Another sell the rip. Okay. Look at this. We have an upward move up on the 240, but it's a sell the rip. So it's up for a down on this time frame. Further out, though, the down is leading to an up. You're like, they contradict each other. No, they don't. If this is going to be a buy, then we need to fall to that price. And that's the difference between a 4-hour and a daily. So down to 42,600. Okay? So this has to go down to 42,600, and then it'll do that according to this. Yeah, me too, Jordan. Eggs and cheese and ham. That's a good breakfast for a diabetic. I made you would call it an omelet, but it was like 2 eggs and like a third of a bag of shredded cheese and then strips of ham. And it was more cheese than omelet. And it even tasted like burnt cheese. And I love that taste. Savory. Yeah. I used to put sliced tomato on there because I really like that. But tomatoes, in particular tomato soup, spikes my sugar. Tomatoes. Got to stay away from the tomato. But I'm at 151 right now. And I was 190 not long ago. So I'm okay. That's a little high considering I haven't actually eaten much food. But I had some cookies. I guess that's what did it. I had to have something. So, yeah. You got to track this stuff. You got to know. So anyways, there you go, guys. Okay, there you go. TRADARS is amazing technically. Think of how much time it saved just to be able to rip through all of these and see multiple time frames and see congruency amongst all these stock indices. And you just write everything down. Sell the rip, buy the dip. Sell the rip, buy the dip. But you just write all these things down, and then you go to your charts. And of course, the fundamental rationale, in particular, this is a great page here to show you what everyone else is doing. Okay. Yeah. Yeah, shows you what everybody else is doing. Very, very cool. The COT stuff we do on Mondays, you could do it over the weekend, of course. And today we spent time on seasonality, looking at patterns. Yeah, which is really cool. But basically, imagine every trade you made had a foundation of logic based on institutional investors, retail traders, seasonality, technical trends, GDP, inflation, jobs, interest rate differentials, so on and so forth. Every trade you made was logical, and you could prove it quantitatively. Imagine that. And then you go to the next step. Once you have your hit list of things to be doing, every single trade you made was technically sound, which means your timing and your logic are radically improved. Imagine that type of control in your trading, where you don't log into a YouTube live stream and ask the guru what to do. You don't need that. Okay? So like at TRADARS, we do performance coaching to ensure that you become the guru, right? The guru inside of you is born, right? So anyways, that's how we do. Okay, that's how we do. I hope you become a member of traders.com. I hope you open a live account with tradersway.com. I hope you become a successful independent trader. Yep. And I think part of that might be you becoming a funded prop trader, and I want to help you do that. So that now you have the fundamental tools, you have the technical tools, you have performance coaching, and I'd like to help you get a live funded account so that you make money. Are you guys okay with that kind of vision? Yeah. Yeah. Cool. All right. Well, peace on earth. May the pips be with you. May your profits be above average. I hope you have a wonderful trading day. At 4 p.m., I'm doing the Week on the Street where we actually download the reports and read them together. It's fun, believe it or not, reading economic reports and discussing the economic impact of these things matter. Cool. Yeah, so I'm excited to do that with you. So have